All right, so how many of you guys get confused with QuickBooks? It honestly is one of the most confusing softwares known to man because you might know what you want it to look like, but how do you get the books to look the way you want them to look? Do you know what I mean? Like if you want the sales to be a certain number, how do you do that? And in this video, guys, I want to talk through my understanding, the best way for me to teach you accounting and QuickBooks and the ins and outs of how it works. I'm by no means a good teacher. I barely made it through accounting. I basically got through college with C's. I even failed my tax class, and I actually tried. So I'm going to do my best to explain these concepts. Maybe I'll be able to explain them better because I didn't understand them in the beginning. But I will say accounting is not easy to understand. It didn't click for me until maybe 3 years into the workforce and being in the real world. And so if I were you and you're just getting started with accounting, you probably should give yourself a little bit of grace. It's not going to click right away. When you hear the word journal entry, does that bring fear into your mind? When you think of the words debit and credit, or assets and liabilities, or stockholders' equity, do you get a little bit, nervous inside when you think about these concepts? They are difficult. So let me try to break it down for you guys a little bit. And I'll just say up front that like debits and credits, for example, you're going to have to spend some time working through these things. I had the benefit of making a lot of mistakes before I even went out my own. And so when I tell people that they should start a bookkeeping company with no experience, I think it is possible. It's 100% possible, but it's going to take a little bit more work on your end to be self-disciplined to learn these concepts on your own. Because QuickBooks and bookkeeping is more than just clicking around in the software. It's more than just adding transactions. You have to be an accountant. You have to understand what's happening behind the clicks, behind the buttons in QuickBooks. And so let me just break it down for you guys as simple as I can. When you create a journal entry, okay, because sometimes you have to create a journal entry. Sometimes you have to make a manual entry. You're going to see debits and credits, okay? And honestly, the best way for me to understand this is if you want to change, if you want an expense to increase on the profit and loss, like let's say you want an expense to go from $100 to $200, how do you do that with a journal entry? Well, you have to debit the expense for that $100 to make it increase, and then you have to credit the bank account, whatever bank account you used. Because here's the principle, guys. Here's the lesson. Assets and expenses go up with debits and they go down with credits. Okay? Assets and expenses go up with debits and down with credits. And liabilities and revenue and income go up with credits and down with debits. Okay? I wish I had a graphic to be able to explain this, but this is the concept that you have to understand. If you want an asset to go up, then you need to debit it. If you want an asset to go down, you need to credit it. If you want a liability to go up, then you have to credit the liability. If you want the liability to go down, you debit the liability. And so I know it sounds like gibberish to you right now. I know it's hard to understand. I have it memorized in my head. I think in terms of debits and credits. And so that's the way you need to think. You need to think in terms of debits and credits. Every transaction has a debit and a credit. So when you go to the grocery store or when you buy something or when you pay somebody something, think about the debits and credits. Practice it. And maybe you need to take a course. Maybe you need to do a few quizzes. Maybe you need to talk to ChatGPT a little bit about the debits and credits. But I think it's important. However, I don't think you have to fully understand it to start a bookkeeping company. I know I just said everything I just said, but if you want to be an expert bookkeeper, if you want to take your bookkeeping to the next level, then debits and credits are going to be a necessary thing for you to learn. So let me just use an example. Let's say you create an invoice in QuickBooks. So QuickBooks has a service, or they have a feature that allows the business owner to send an invoice to a customer, okay? When an invoice is created in QuickBooks, what happens, okay? So let's say an invoice is created and sent to the customer. Nothing's been paid yet. No money has actually been transferred. What is happening in QuickBooks? One thing is happening. A journal entry has automatically been created behind the scenes. You might have clicked send invoice. Maybe you didn't create a journal entry, but what's happening behind the code behind that invoice is a journal entry. And the journal entry is this. Every time you create an invoice, the journal entry is this. It's a credit to sales because let's say the invoice was for $1,000. Your income goes up by $1,000. Even before you collected the money, before you received it, your income on your profit and loss is now reported at $1,000, okay? So you send the invoice out and boom, it gets reported on the profit and loss under the accrual basis. Now, what's the credit? What's the debit? So the credit was sales. The debit is accounts receivable. You haven't received it yet, okay? Normally, like let's say you received $1,000 right away. You might book a sales receipt in QuickBooks and it would be behind the scenes, it would be a credit to sales and a debit to the bank account. The bank account would go up. But in this case, you haven't received the money. It's an invoice that was sent out. And so the debit is accounts receivable. You haven't received the money yet, but you expect to receive it in the future. Accounts receivable is an asset. Assets go up with debits. So your credit went up with, your sales went up with a credit, your accounts receivable went up with a debit, it ties out, it equals. So that's what happens with an invoice. Accounts receivable goes up and income goes up, okay? I kind of drove that home hard, and if it doesn't click, it's because it hasn't clicked, okay? You gotta be patient with yourself. Now, there's another feature in QuickBooks where you can select receive payment. What's happening there? What's happening when you select receive payment? Well, receive payment basically clears the accounts receivable. So let's say you send the invoice to the customer and the customer holds that invoice for a little bit and they don't pay it right away. You're still gonna show the sales, the income on the profit and loss as $1,000, and you're gonna show accounts receivable as $1,000. Now, when you actually receive the money, let's say they give you a check for the $1,000. What you're supposed to do in QuickBooks is you're supposed to select the button in the invoice for receive payment. When you select that button for receive payment, the journal entry that happens behind the scenes is a debit to your bank account because you deposited the money into your bank account, and it's a credit to accounts receivable, okay? So that's what happens when you actually receive the check. Now, one thing I think I just messed that up a little bit because before you even deposit the money, when you select receive payment, it actually uses a feature in QuickBooks called undeposited funds, okay? So what happens when you select receive payment is it actually debits undeposited funds if you haven't deposited that money yet. Because if someone gave you a check and you're holding it now and you haven't deposited it in the bank, or maybe you deposited it in the bank, but it's taking a couple days to actually clear the bank, QuickBooks will hold it in undeposited funds until you actually deposit. So the journal entry behind receive payment is actually debit to undeposited funds and a credit to accounts receivable. So your accounts receivable is zeroed out, and now you've got undeposited funds. Undeposited funds can get really tricky. It can get really confusing because if it's not handled properly, then your books will be a mess. And I see it all the time. Almost every client that does invoicing in QuickBooks has undeposited funds that are skyrocketing. It's either negative or it's positive and something isn't working properly. Undeposited funds is not supposed to hold a lot of money. It's a temporary holding account. There shouldn't be anything in that account that's in there for longer than more than like 3 days. So you need to make sure that that undeposited funds account reaches zero pretty consistently. Because the only reason it should be undeposited is if you literally have the cash or the check on your desk. And so what happens when you deposit it? So how do you clear the undeposited? We cleared the accounts receivable. It was originally created with the invoice, and then it was cleared out when the deposit was received, when you hit receive payment. Now, when you actually deposit the check at the bank and it clears the bank, then it shows up in your bank feed. And when it shows up in your bank feed, that's when you match the deposit to the payment. And when you match it, the journal entry that happens behind the scenes is a debit to your bank account and a credit to undeposited funds, okay? So originally it was a debit to undeposited funds and it was increased by that $1,000. Then when you match it in the bank feed, it's a credit to the undeposited funds. It clears it out and it debits the bank account, okay? So I know I'm throwing out a lot of terms. debits and credits, but that's how you have to think. Like when there's a problem in QuickBooks, when you can't get to the bottom, when you don't understand what's happening behind the scenes, it just makes it a little bit harder. And so you really need to understand what's happening in QuickBooks. And QuickBooks, thankfully, will handle all of this stuff for you. But like I said, sometimes there are issues, and it really does help to know what happens when you click certain buttons. So let me just summarize it again for you guys real quick. When you select invoice, when you create an invoice and send it to the customer, it automatically records the income on the profit and loss. Even before you collected the money, it shows up on the profit and loss. Now, clarifier on that, if on the profit and loss in QuickBooks, you toggle the button cash basis instead of accrual, if you do cash basis, then that income won't show up until you actually receive it. But for these purposes, I'm gonna assume you're looking at an accrual basis profit and loss. Accrual basis shows you the money that you've earned, but not yet received. Cash basis shows the money that you've received, not necessarily earned. So that's the difference there. So when you create an invoice, boom, it shows up on the profit and loss, and you also have an accounts receivable on the balance sheet. When you select, when you actually receive the check and it's sitting on your deposit, the customer hands you the check, you go into QuickBooks, you select receive payment, and boom, what happens there? Then when you receive the payment, nothing changes on the profit and loss unless you're on the cash basis. But if you're on the accrual basis, nothing changes on the profit and loss. What does change is undeposited funds goes up and your accounts receivable goes down. You've collected the money. It's no longer on accounts receivable. Now, when you bring the check to the bank, you deposit the check at the bank and it clears the bank. Then you go to your bank feed and boom, it shows up in the bank feed and you match it to the received payment. And when you do that, undeposited funds gets cleared out and your bank account goes up, okay? So that's what's happening behind the scenes. It took me forever to understand that. Even after 7 years in public accounting, even after starting my business, I still didn't fully understand how QuickBooks was supposed to work until like 6 or 7 months into owning my business. I wish there was a video like this that woke me up, that helped me understand the behind the scenes of how it worked in QuickBooks. And so hopefully this video is helpful for you guys. It was probably all over the place, but that's okay because I got C's and C's get degrees. And honestly, I think it's a fact that the most successful people in the world had C's in high school and college. So there you go. Thanks for watching this video. If you enjoy this content, please comment and let me know, or you can like the video, but definitely subscribe if you haven't already. If you're curious about where my bamboo went, my bamboo is gone. You can maybe see it in the shadow there. It's actually over here. You can kind of see it. It really started to die over Thanksgiving break. It looks very wilty. And so just told me that I should put it closer to the window, and that's what I'm doing. All right, guys, I appreciate it. Thank you.